Welcome to Korea Market Explained. KOSPI was the best performing major index in 2025, up 76%, and then surged another 51% from January to its February 2026 peak. What's happening in Korea? Let's study together. Imagine a stock market full of globally competitive companies, semiconductors, shipbuilding, defense, batteries, and it goes absolutely nowhere for over a decade. That was Korea. From 2011 to 2024, 13 years, KOSPI returned just 33%. The S&P 500 returned 368% in the same period. Then everything changed. From the start of 2025 to the February 2026 peak, KOSPI surged 164%. The S&P gained 19% in the same window. So what changed? And more importantly, is this the beginning of something real, or just another false start? To understand why KOSPI's recent move matters, you first need to understand why it didn't move for so long. South Korea is the world's 13th largest economy. It's home to Samsung, the world's largest memory chip maker. Hyundai, one of the top 5 automakers globally. LG, POSCO, HD Hyundai, companies that compete and win on the world stage. And yet, KOSPI has consistently traded at a price-to-book ratio of around 1 times. The S&P 500 sits at 4 times. Even the Nikkei, which had its own decades-long stagnation, trades at 2 times. This gap has a name, the Korea discount. So why does it exist? 3 main reasons. First, corporate governance. Korean conglomerates, the chaebols, are family-controlled, and minority shareholders have historically been an afterthought. Profits get recycled within the group, not returned to investors. Second, cross-shareholding structures make it nearly impossible to understand what you're actually buying. One holding company owns stakes in dozens of subsidiaries, which own stakes in each other. Valuing that is a nightmare. Third, geopolitical risk. North Korea is literally across the border. For foreign investors, that's a permanent discount on any Korean asset. These 3 factors kept a lid on Korean valuations for years, regardless of how good the underlying businesses were. So what changed? Let's start with the most obvious trigger: semiconductors. DRAM prices collapsed through 2022 and into 2023, down over 50% at the trough. Samsung posted its worst quarterly loss in over a decade. But memory chips are a cycle business, always have been, and by late 2023, the cycle turned. Then AI poured fuel on the fire. Contract DRAM prices surged over 420% in 2025 alone, from $3.75 in January to $19.50 by November, according to TrendForce. SK Hynix has reportedly sold out its entire 2026 capacity already. The driver is HBM, high bandwidth memory. Training and running large AI models requires enormous amounts of it. The HBM market barely existed 3 years ago. Bank of America forecasts it reaching $54.6 billion in 2026 alone, a 58% jump year on year. And who leads HBM? SK Hynix, with 62% market share as of mid-2025. Samsung is racing to close the gap. This isn't just a cyclical recovery, it's a structural demand shift driven by AI infrastructure build-out that's not going away anytime soon. For KOSPI, this matters enormously. Samsung alone is nearly 20% of the index. SK Hynix another 8 to 9%. When semiconductors move, Korea moves. The second trigger is one that few people outside Korea saw coming: defense. Russia's invasion of Ukraine in 2022 was a wake-up call for NATO countries. Suddenly, everyone needed artillery shells, self-propelled howitzers, tanks, and they needed them fast. Western defense manufacturers couldn't keep up. Their production lines had been scaled down for decades. Korea could. Companies like Hanwha Aerospace, Korea Aerospace Industries, and Lignex One had been quietly building world-class defense manufacturing capabilities for years, partly because South Korea has always had to take its own security seriously. Look at the numbers. By 2025, the top 4 Korean defense firms are projected to hit $28 billion in combined sales, more than triple what they did in 2021. Poland alone has signed deals worth over $20 billion. Saudi Arabia inked a $3.2 billion missile defense contract in late 2025, and the combined order backlog across the big 4 firms has crossed $72 billion. That's 4 to 5 years of production already locked in. Hanwha Aerospace's operating profit quadrupled in the first half of 2025 alone. Korea now ranks among the world's top 10 arms exporters, according to SIPRI. But here's what makes this different from a typical defense boom. These aren't one-off contracts. Korea is positioning itself as a long-term alternative to US and European suppliers. The pipeline is multi-year, possibly multi-decade. The third trigger is the most important one, and the hardest to price. In 2024, the Korean government launched what it called the Corporate Value Up program. The inspiration was clear. Japan had done something similar. The Tokyo Stock Exchange pressured companies trading below book value to improve shareholder returns, or explain why not. The result? The Nikkei hit a 40-year high. Korea wanted the same playbook. The program encourages listed companies to disclose plans for improving ROE, cutting cross-shareholdings, and returning more capital to shareholders through dividends and buybacks. For the first time, there was real government pressure on chaebols to start treating minority shareholders like they matter, and you can see why reform was needed. Korea's dividend payout ratio has historically been among the lowest in developed and emerging markets. Companies were sitting on cash, not returning it to shareholders. Early signs suggest it's working. KB Financial, Hyundai Motor, and others have announced shareholder return programs that would have been unthinkable 5 years ago. But here's the honest caveat. Japan's reform took years to fully play out, and Korea has tried governance reform before without much follow-through. The question isn't whether the intention is there. The question is whether the pressure is sustained. If it is, this isn't just a cyclical trade. This is a re-rating story. Korean companies could structurally trade at higher multiples, not because earnings improved, but because the market finally trusts that those earnings will flow back to shareholders. So let's bring this together. KOSPI's move isn't random. It's the convergence of three things happening at the same time. A semiconductor supercycle driven by AI, a defense industry finding its moment on the world stage, and a government finally pushing companies to act in shareholders' interests. Any one of these alone would have moved the market. All three together is why we're seeing a move that feels different from previous false starts. Now, does that mean you should go all in on Korean stocks tomorrow? Not necessarily. DRAM is a cyclical industry. What goes up comes down, and the next down cycle will hurt. Geopolitical risk hasn't gone anywhere, and governance reform is a process, not an event. But if you've been watching Korea from the sidelines, wondering if the discount would ever close, this is the first time in a long time where the answer might actually be yes. The story is still early, and that's exactly why it's worth paying attention. If you want to go deeper, we'll be covering each of these themes in detail in upcoming videos. DRAM and HBM, the K defense build-out, and a full breakdown of the Korea discount and what it would take to close it permanently. Subscribe if you don't want to miss those. And if you found this useful, share it with someone who's been sleeping on Korea. I'll see you in the next one.